I'm Corbett Wall with DV Auction, here with your feeder flash for Friday, October the 29th, brought to you in part by Vitalix. Vitalix is committed to leading the way in how controlled, consistent nutrition is delivered to almost all species of livestock. Get the blue tub, visit Vitalix.com. Leaving futures behind, and I'm talking about cash. Our cash has been steadily higher this week, gaining in leaps and bounds. Some of your cash feeder markets are certainly doing that, and your fat cattle are too on the cash market. But we saw some decent gains early in the week on our futures prices, but then the last 2 days they've been almost down as much. And so, we're wondering, why is the futures not following our cash? And we continue to struggle because we rely on investors outside the industry to be on the long side of our futures, because as an industry, we put so much pressure on the futures through hedging and things like that. It just is hard to keep enough people on the other side. We need to do something to give those investors the confidence in the market to go long and bet on the upside. Our fundamentals are completely bullish. We've even seen the cattle on feed report be really bullish last Friday, and yet we just can't seem to continue to lure investors on the long side of the futures market. So we're struggling with that. We need the futures market to kind of keep up, and it does as we get to maturization of our contracts, and we see that in our nearby spot markets on October live cattle and the futures, and your October live and your feeder futures. But October live cattle were down pretty heavily on Thursday, and they went under likely what our weighted average is going to be in the 5 area feeding region. So they're going to have to come back up here the last day of this week, because we're at the end of the rope here. And on your feeder cattle futures, our October was up just a smidge, but it's actually surpassed what our cash index is as we get to the end of the contract here. So it's going to have to go back down here on Friday before we close out the month here to line up with what our CME cash feeder cattle index is. But when you go out from there down pretty hard, and our November feeder cattle are and we know that as we go forward we're going to gain ground here, but they're backing up with no confidence there. And our December live cattle are also backing up. They were down $1.25 on Thursday, but we're looking at a very pivotal week here, as we're likely going to see the highest weighted average in your 5 area feeding region on negotiated fat cattle that we've seen all year this year in 2021. At the same time, we're likely to see the largest cattle harvest that we've seen this year so far in 2021. And you think, well, how does that work? Your packers having to pay more for cattle, yet they're slaughtering more of them. You would think they would back up from that. And you think, well, maybe it has to do with beef demand. We enjoy outstanding beef demand continuously. We have for the last several years. And you think, well, how is this working? And it's just as simple as your packers manage both supply and demand of beef, of cattle. They manage the supply of cattle. They dictate how much is sold each week. They've got 80-some or 90% of their needs already filled. That they bring those cattle in, they back them off, and we have gotten to the point where our market-ready supplies are just tight enough that we're starting to claw back into a little bit of leverage. Your packers kind of messed up over the last 6 weeks. They haven't bought enough cattle for the 2 to 4 week delivery to set the market up like they normally do. And so now they don't have enough cattle, in the little bit, a dab that they need in their immediate needs here, that they have to fill through negotiated trade. So we've seen a very healthy negotiated trade this week already, 85,000 plus in the 5 area feeding region alone, and we haven't seen that much at all, that kind of volume trading. And so, but then you think, well, your packers, they manage the demand too. Absolutely, they do. They keep these huge supplies in the coolers, and they hide most of the demand for beef in these far out front trades that they sell to their customers. And that we've seen a higher volume of spot or nearby box beef cutout value trade here in the last several weeks, because they kind of screwed up again. They didn't keep enough back. And so, they've made a big error here, and it's our opportunity here to gain a little bit of market. And I keep telling you guys, your cattle producers are not in the beef business. You're in the cattle business. Your packers are in the beef business, and we've allowed them to control the supply and demand of slaughter cattle, market-ready slaughter cattle. That's what happens when you have monopolies. That's just absolutely what happens when they control the supply and the demand. And all your finished fat cattle are going to go to these four packers. They have to. There's just that nobody else is big enough, and ultimately we have to rely on them to do it. Now there's talks of us getting some more sizable plants on, and hopefully we can get them on in the next couple of years. That would make a big difference. But until then, and don't think they're going to pull everything but a knife, and they might do that too, to try to keep their customers from going to these new plants. They'll sell at a loss before they give up their business to some of these new plants that are coming on. But I hope they've allowed enough money, these new plants, and I know it costs a ton of money to build a new plant and purchase the supplies of cattle that they need. Most of these new plants are going to be set up in a way where they have shares, or the investors have the cattle that they bring in. But I hope they keep enough money back to fight off these packers, because when they get ready to sell that beef, they're going to come under some really, really tough competition there. We've seen that on the smaller plants that we've seen start up here since the worst of the COVID. My good friends there, the Herzogs out of Butler, Missouri. I've told you that story a couple times about how they were producing a high quality all natural dry aged beef there south of Kansas City, and they were able to get into some big supermarkets, and they got big enough that they were stepping on some of the majors' toes, and the majors just called up and threatened the supermarket, and then they cut them off. And don't think they won't do that on a larger scale whenever we get some of these bigger plants up and going. But it's just going to be hardball, and I hope those guys realize it. I know they do. But that's how tough this business is. And I told you, it's not a coincidence that your mobsters started out in the beef packing industry in our big eastern cities. That's all they know, and that's the way it still is today. It's just on a bigger upscale level. But we got a chance to get $1.30. That is a big barrier. It's a glass ceiling that we can see, but we can't seem to break through it. And your packers have done everything to keep that market under $1.30. We could realistically get $1.30 this coming week. We could get $1.30 for fat cattle, and I don't mean a few head in a sale barn here. I mean your one big price, your volume price, maybe even your weighted average in your 5-area feeding region. All you have to do is hold back. They're really needing cattle. Guys are selling cattle dollars and dollars higher this week, and they're calling for delivery of those cattle immediately. And we've got them short bought. We've got an opportunity here. If we could break through that $1.30, there's no telling where we could get that market. And I talked about your December live cattle. It went down $1.25 on Thursday, and it's sitting just right above that 130. The industry and the outside investors have no faith in your fat cattle market to break $1.30. Let's show them that we can do it. Let's show them that we have a little bit of leverage here, even though you and I both know it's very minimal. But we've got an opportunity to do something here in this last quarter, and we absolutely have to get it done. But we just hope, as we're gaining this ground and we're starting to, guys are starting to get a decent price for their cattle, and things are kind of rolling here. We hope that President Magoo's vaccine mandate doesn't kill it, like it's threatening to ruin Thanksgiving for people that want to fly on a plane to go visit their loved ones, or buy the favorite toy for their kids that we can't seem to get to the stores because our supply chains have been interrupted. But if these packing plants can't run wide open like they are this week, or having, like I said, likely the biggest cattle harvest that we've had so far this year, and we're getting past those black swans and everything, if we can just keep things rolling. But if we can't keep enough workers in these plants, because several of them, or a fairly high percentage of them, don't want to get the vaccine, and then the employers, the packing plants, are going to have to lay them off or keep them from coming in. And then I've told you the worst part of it is your federal employees that are in those plants inspecting the product, grading the product. And we know that they're November 22nd. We know that they're going to be out of a job if they don't get their vaccine. But we just hope that deal doesn't kill this rally that we've got going. That would likely be another black swan event. And after the fire at the Finney County plant, and then the worst part of the COVID, which seemed to last forever, I don't know that we can handle another black swan to come in here and jerk the rug out from under us. Let's look at your futures market on cattle on Thursday. Your October live cattle futures were down 272 at 124.5, and they're likely going to have to come up just a little bit here on the final day. But December down $1.25 at 130.32. You go on your back months of your live cattle, down 82 cents to down $1.50. October feeder cattle were up 17 cents, and they've pushed up just a little bit higher than what I think, even though with the big prices that we saw on Thursday, we're likely not to get the CME index that high. It's probably going to have to back off just a little bit. But November feeder cattle down 82 cents at 157.65. Go on your back months, your feeder cattle down $1.35 to down 202. And that 202 is September of 2022 feeder cattle. That's your highest yearlings of the year, coming off the grass, and the biggest demand for them because nobody wants to fall calf. But even though it was down $2.02, your September feeder cattle are still almost 171.5 based on a 800-pound steer. That's pretty sizable, guys, and if you're not locking into that or given a livestock risk policy or something like that, you need to do it, because we could get $1.30 for fats. We could boost this futures off, and it could keep rallying like it has been. But gosh, it's a big risk. How about your fat cattle trade? Not a lot of trade. The bulk of the trade happened on Wednesday, but we did have a little bit more trade on Thursday. But still, around 85,000 have already sold pure negotiated cash. I'm not talking about a negotiated grid deal that doesn't include any negotiation. I'm talking about pure negotiated cash. That's the only way we gain market position, and we gained it this week on higher volume, with your packers really needing cattle being short bought, and tighter supplies of market ready cattle. But you look at your trade that we have, which I said was minimal, might be a little bit more that they didn't get rounded up. I doubt there's a whole lot of trade on Friday, but Iowa had just 600 head of confirmed sales on Thursday, 22,500 head for the week, and Iowa could likely sell a few more there. But your live price in Iowa, 127 to 128, and your dress market from $1.99 to $2. That's the extreme top of this week's range. So that's gaining a full bore there, and we've dropped off the lower end of the range there. Nebraska had 1,400 head confirmed sales, likely a few more than that, but 35,300 head of confirmed sales this week, this past week here in Nebraska. That's the biggest movement we've had for a while. We don't see that on a regular basis, but 126 to 127 in Nebraska live, and $2 dressed. Kansas did not have many, less than 100 head, 14,400 head confirmed for the week, and the market's at the high price that we saw in your one price for your Southern Plains, which was 126. Texas, less than a load of cattle confirmed, which is nothing, and who knows what those were, but 12,500 head, which is enough for us to be a robust market. If we could get that typically every week, that would be great. But without these minimum negotiated cash bills, well, we can't keep a healthy negotiated market every week. If we could get those pushed through, we could enjoy this kind of a market every week. 12,500 head in Texas, and like I said, your weighted average is likely going to be the highest that we've seen since 2021. I mean, it's sure going to be over 126 because the Northern Plains, we didn't sell that many that way. There are a lot of them 127 and 128. But you look at a sale barn, and you may think it's minimal, but it's your biggest market out east, and one that I worked in for 3 years there in New Holland Sales Stables in New Holland, Pennsylvania. That's the heart of Lancaster County, Pennsylvania Dutch area, and they feed some really premium type cattle. Most of their feeder cattle come out of Virginia. They slow, long feed them, and those cattle will absolutely grade, and they're some of the best to go into the hotel restaurant market out east. But in the fat cattle auction that they had on Thursday, they sold the bulk of their fat steers from 125 to 134 with outstanding individuals. And you say, oh my gosh, individuals, but there will be several of them because they still have a lot of smaller mom and pop butcher shops that do their own there, and they want real premium quality product, but outstanding individuals up to 150 and a half at New Holland Sales Stables. Look at your box beef cutout values, and they were up on Thursday. They'd been kind of sluggish and uneven here for the past 10 days or 2 weeks, but choice cuts on Thursday afternoon, $284.49 up $1.26. Selects up 95 cents at $260.64. Look at your slaughter, 488,000 through Thursday. That's 6,000 more than last week, 25,000 more than the same week a year ago. Your actual slaughter information came back 2 weeks delayed for the week ending October the 16th, with your average dressed steer carcass weight at 922 pounds. Still up there, guys. We should see that kind of tail off, but it's still a pound bigger than the previous report. What else is going on? I want to talk to you about Livestock Risk Services. Those are one of the professionals that can help you rope into one of these livestock risk protection policies that you don't have to take a futures position. You don't have to open an account at a commodity office. You don't have to worry about margin calls, things like that. You just pay a premium policy there, and you're locked in to a price out front. Will protect you against the market going down on both your backgrounding cattle, your middleweight backgrounding, your yearling backgrounding, and if you're feeding cattle, you can do it too. You don't have to have a square load of them. Don't have to be all steers. Get a hold of Livestock Risk Services at livestockriskservices.com. Talk about your feeder cattle market, your real-time index on DV auction late in the day on Thursday, based on an 800-pound steer, set at 155.45. That's based on an 800-pound steer, guys. That's pretty smoky there. Up 80 cents compared to Wednesday's close. Look at some of your big sales on Thursday. Farmers and Ranchers Livestock in Salina, Kansas had 2,200 head there, and the best tested weights, which I looked at on Cattle Market Central, were mostly $1 higher. We continue to struggle in Kansas with incompetent market reporters there, and you can't make heads or tails out of what they're doing there. But pretty good market there in Salina, Kansas. Straight south of there, Pratt, Kansas, Winter Livestock in Pratt, 1,300 head there. Market there mostly steady to $2 higher, but a stick out deal in Pratt, and and this would have had to have been more higher than that. It's one of the highest quotes I've seen anywhere all week. 55 head, 927 pound yearling steers in Pratt, Kansas, bring 168.10. That's $13 over what your index is based on an 800 pounder, and these things weighed over 9.25. Oh my gosh. How about a market in the Northern Plains where they're still moving those big droves of calves? Belle Fourche Livestock Market, Belle Fourche, South Dakota, 7,400 feeders on Thursday. Your steer calves, your 4 and 5 weight steer calves, there's just so many of them. I mean, the market's been flooded up there, and they're going down south to wheat. I mean, they're going back east into Iowa and eastern Nebraska to go right on to feed. And I mean, there's a lot of demand for them, but there's just so many of them moving. Even though your market's higher, your popular weights of steer calves were still $2 to $3 lower, mostly because we don't have enough trucks to haul them off, guys. And they're just limited to that. And you can't leave, calves sit around a sale barn for 2 or 3 days, especially those that are unweaned. I mean, you got a wreck on your hands by the time you get them home. Now, the heifer calves were just kind of lightly uneven there, from $1 or $2 higher to $1 or $2 lower there. But look at some of your best tested weights on those calves out in Belle Fourche. Look at this automated market report from Cattle Market Central. 778 head of 4-weight steers average 448 at 190.21 on your average. Almost 2,200 head of 5-weight steers in Bell average 540 at 173.53 on your weighted average price. Your heifers, 1,376 head of 4-weight heifers averaged 465 on the weight and 162.31 on the price. A little over 1,400 head of 5-weight heifers in Bell average 540 pounds at 158.62. Some other stick out deals there. Mocan Livestock Market, and that's the Herzogs that I commented on a little bit ago about their meat company there. They built their own packing plant right next to the sale barn. Good for them. They're trying to do something to help things rather than just take advantage, like a formula trader or somebody like that. But Mocan Livestock, Butler, Missouri, 137 head of steers, weighed 742 at 171.35, and that's in western Missouri, guys. Pretty good quote. How about Mitchell, South Dakota? Mitchell Livestock sold 106 head of steers that weighed 1077 at 154 and a quarter. Ogallala Livestock, Ogallala, Nebraska, sold 258 head of 443 pound fancy little ranch raised steer calves that bring 220.50. But the best quotes that I saw anywhere, and it doesn't surprise you, they come out of the sand hills of Nebraska, up there in the northwest corner there. But Valentine Livestock, and that's our Zach Tran top quotes for the day. Greg gave me several. I'm going to give you a couple here, but the Schumacher cattle there, these are off the cow. 65 head of steer calves off the cow weighing 731. You think they don't have some genetics behind them? Bring $175. But the top quote that I saw anywhere on Thursday, or anywhere for the week that matter, were the Dan Dent cattle in Valentine. 130 of those steers weighed 851. Now they're true yearlings. Bring $171.50. And that's your feeder flash for Friday.